What's going on, everybody? Mark Fleetwood here. Welcome back to the Daily Grind Trader. Today, I'm bringing you a video to show you a trading strategy that is absolutely insanely easy to use, yet insanely effective, and it only requires 3 simple indicators. That's it. Stay tuned. I'm going to tell you all about it. All right, everybody, we know the drill. I'm not a financial advisor. This is not financial advice. I simply share my technical analysis so that you use it how you see fit, and you remember that you manage your own money and you manage your own risk. If you like these videos, please like the video, hit the like button, subscribe to the channel, all that good stuff. It all helps me tremendously. I appreciate it greatly. Now we're going to hop into these charts because right now we've got FTM, and FTM is about to make a move that is ready to move based on this trading strategy. So I wanted to get this video out now. Right now I have the moving average ribbon, which gives you 4 moving averages, but I only use 3. I'm only using the 21, the 50, and the 200, and I'm using it smooth, SMMA, the smooth moving averages. You don't have to do it this way, but I prefer it this way. It seems to work better for me to do it this way, and I'll show you why. I also use the RSI. But the RSI, I don't use a top band and a bottom band because oversold, overbought, none of that matters. That is not the best use of RSI. And again, I'll tell you why that is the case. I use the 50 as an indicator to show me whether I'm going to go long or I'm going to go short. That is it. And then I use the RSI to find divergences to trigger, to start looking for an entry. And I've got some drawings on here, and I'm going to open up the draws and I'm going to show you everything that's drawn. So we have our support resistance lines. We have a support here, we have a support and resistance here, 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 so on and so forth. Now, recently on the 8th of January was the start of it. The 8th of January we had a price go from a peak here at 315 and it came all the way down to the support line at 220, roughly 220, and we bottomed out. We had a bottom. And 2 days later, we double tap that bottom. So we have a straight line from this bottom to this bottom. But on the RSI, you'll see we had a very low RSI here of 18, and then an RSI here of 33. There's a massive difference between the RSI and the price. That is a bullish divergence. That shows you that there's a strong likelihood of a bullish move coming. This is a double bottom. This shows you that the reversal is likely. It is likely to be a reversal, so now you want to watch this move. The second part of this trade, so we've got our divergence. Now we're looking to see the moving averages start to curl. You see the 21 starts going first. The 21 starts to curl up. Then the 50 starts to curl behind it. Once you got a curl like that, now you're looking for your trigger. So the 21 starts to curl. We've got these, my candles are color coded for, this is standard kind of average volume. This is really light volume. This is a really light volume day. The dark green is a high volume candle, so high volume hour. So what we had a high volume buy, a high volume buy, a high volume buy. This high volume buy with a very, very big, this is a big engulfing candle. It's a almost 4% hourly candle. And what this did was we had already been above the 21. This candle broke the 200. This candle retested and broke the 50. It also broke the neckline for our double bottom. So this was a no-brainer entry point after this candle. And I entered the very next candle. Now it doubled back. It retested the break of the neckline and then shot up. So here we've got a 14.5% trade. Even if you're not trading with leverage, 14.5% on a 17-hour move, that's one trade, that's one day, that's 15%. That's a good day. It's a 3.4 to 1 reward to risk ratio, and you're only risking 4%. Now on 10x leverage, that is a much higher risk. It's a 40% risk, but it's a 145% gain. And you've got confluences all over the place. You have your bullish engulf, your bullish divergence. You've cracked above the 21, above the 200, and then above the 50. And as this price moves, after you enter here, now you've got the 50 as a potential support, the 21 as a potential support, and the 200 as a potential support, all within your stop loss range. So think about the number of supports that would have to break to get you out of your stop, or to get you stopped. Now, as this continues to rise up, you see the 21 crosses above the 200, then it crosses above the 50. Now, at this point, you see the trend is defined. We are 21 above 50, above 200. Now, the reason why doing this with divergence on bottoms and waiting for the curl means that you can get in earlier in the trend. You can confirm it, you can confirm the trend, but you can get in early enough on the trend to where if you wait for all three of these to be going in the same direction, you're getting in on this candle here. And before you know it, you're in a consolidation range. If you wait for all three moving averages in crypto on the hourly chart, for all three moving averages to be stacked in the order that you want, you are very near to either a break of that trend or a consolidation, be it a continuation pattern or a reversal pattern. Either way, you're very close to a consolidation or a break of the trend. So doing it this way, you're seeing the edge and you're seeing the flip. This bottom, we knew we were bottom, we knew we had a bearish or bullish divergence. These first three would have been tempting to get in on, but you have absolutely no confirmation here. You don't have volume yet. You haven't broken the 21 day yet. I mean, this one you get in, you broke the 21, but you've got to break the 200. What if this just gets stuck here between the 21 and 200 and just rides sideways? And then once you break the 200, you still got to break the 50. Now, granted, you may not always have to break all three to get into a trade, but this was optimal to have the 200 broken and the 50 broken. And then that 50, that candle that broke the 21, or broke the 200 and the 50 also broke the neckline, and that was just a golden opportunity. This was the absolute highest confluence trade that you can take. And again, you get it very quickly, you get to the next level. This support resistance line here didn't really bother me any because you can see that it was a top here and it broke through 1, 2 levels and got to the third level. We could have taken this all the way up to this level, but I knew I could get this. I wasn't sure about this, but this was a short, easy hit, and it was a surefire thing. Now, coming the opposite way. Right now, we had a high, and then a higher high, with a high RSI and a lower high RSI. And this also is the highest resistance so far that FTM has ever come across, even all the way back to October. If I zoom this all the way out, the previous high, this was the resistance, and we can zoom this in and see that nothing really closed above this. It went up and it always failed to retest, and then it became a resistance again. Broke above it, failed to retest, became resistance again. So nothing has clean broken this 334 line yet, and it just got tapped again. So I'm looking for a short position here. Now, we just crossed over to 21. Now we have super strong selling pressure here. This sell volume is very strong sell volume on this large candle. This could have been an entry, but you don't want to enter here and have a range between the 21 and the 50. I would rather wait for another strong volume candle to break this 50 and get in around $3 and watch this thing really start to curl down, because as of right now, the moving averages are still moving up. The moving averages are still showing an uptrend. Now, this has broken structure. This has made a new lower low, because this was a high, a low, a higher low. Now we have a lower low. So this has broken structure, but I want this retest of this support resistance line to break back down clean, to break clean through. And as of right now, it's buying up. This is likely going to be a wake up candle and actually end up being a sell candle, because right now the volume is low and we are below the 50. So when the next time this sells down, if you have strong volume and you'd like to get close to the 50, but I can see if you would want to get in after this retest of the support resistance. If this sells back down, you can get in, and you could likely ride this at least until this line here, and potentially even all the way down to here, because we still have another support resistance that we could go to all the way down here at the bottom. I don't see that happening yet. I wouldn't want to run that trade for that long and potentially lose some of the profitability of it. But that's the trade on the hourly. That's the way you would make this trade on the hourly. And I'm gonna go into Bitcoin real quick to show it on a smaller time frame. So I'm gonna go to the Bitcoin on the 5-minute charts. And this is a particular one that I saw earlier today. So we have a resistance here. And you're obviously going to have smaller ranges for support resistance. Here, the price is sitting on currently. So we got 4 here. And we'll go one more. See, we got 42.5. Somewhere right around 42.5 is a support resistance line here. Around 1 p.m. I got into this trade. So 12:40. So this was it. We had a high. And I'm going to draw this little circle here. We had a high. And we have a high here on the RSI. And again, we have a higher high there. And on the RSI, we have a lower high. You see how they are opposite of each other. This is a bearish divergence. This shows you that the trend is weakening. The price went up, but the strength went down. The trend is weakening. And you see it start to sell off. And then you see this start to hook. You see the 21 start to hook, and the 50 start to hook, and the 200 starts to bow. What I had here was I bought, or I put the sell order in on this candle, this big engulfing candle that broke through the 21 and the 50. That's the kind of move I'm looking for FTM right now. Short position, let me do this the right way. And we enter here. The top of this engulfing candle is my stop loss. And then we ride this down to this support resistance range. And then it's a little bit better than a 2.5. So 2.8 to 1 is a strong reward to risk ratio for a scalp. And it hit relatively easy. There was no pain here. There was no sweating this out. I put this order in and I took my Christmas tree down, took down all my decorations, packed up, was getting boxes in and out of my basement, and I came up, grabbed a drink, looked at my phone, like, oh, cashed out, trade's over, done. So this was only 2 hours and 5 minutes. That's all it took. So that's it on a smaller time frame, but you're still looking for the same things. We've got a bearish divergence. We have a bowing of the moving averages. We have a strong candle in the direction that we're looking to go. We have a bearish engulfing, a large bearish engulfing candle that broke through the 21 and the 50. Then we take our trade. We're below the 50 on the moving average, and I took a short. I took a short on a candle that finished at 34. The candle prior finished at 39. I took a short with an RSI in the 30s because when it finished up, by the time my short finished, the RSI was all the way down to 27. So don't worry about overbought, oversold. Don't worry about that. Look at trend. Look at the strength of the trend and where it's going. That's more important than RSI and overbought and oversold. And I want to go back to FTM real quick. I bought in on a long position. I longed at 70 on the RSI. And by the time my position closed, it had peaked at 82. And it went even higher than that. And it peaked up to, and I went back to 82. I'm not worried about that being that dashed line where that was previously oversold or overbought position. And you don't buy in an overbought position. No, you buy the trend. You buy the reversal of the downtrend going into the uptrend, and now you know we have strength. That's an RSI of 70. That is a sign of strength. It's not a sign of it's going to reverse already. It just started to move. So keep that in mind, guys. And here, this was a strong sell, a strong volume sell. This could very easily be ready to short within the next hour or two. This could be just a retest of the support resistance, and then we have a big sell down and something very similar to what that Bitcoin short I just showed you, and then we're in on a short here. So with that being said, guys, that's the video for today. It's a little bit longer than previous ones. I'm going to try to cut this up pretty good, but super easy indicators to use. But use RSI the right way. Use it for divergences and strength of trend in either direction. That's what RSI is for. Moving averages, use them to your advantage. Guys, I hope you like this video. I hope you are able to use this strategy and trade successfully with it. As always, until next time. Peace.